Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session for August 29th of 2021. We will be going through our usual agenda, a look at the prior week's results, our currency strength meter for the week, any fundamental announcements on the calendar, a look at the major pairs on the daily chart setups we see in progress, and a few words in conclusion. Starting with the ledgers, the long-term ledger had a significant hit, but this is because we closed out a bunch of trades that were not producing. So anything that was starting to go negative, we manually closed out this week and we kept the winners. So as a result, we did take a hit, but we have ample open profit on the trades that we did keep. Basically, all of them were at profit as the week ended, and we'll see what this new week brings us, but it is looking good. So I would expect that negative to reverse itself as soon as we close out some of these winners, which we won't until they start turning back. So as long as they're making money, we will be keeping them open. And of course, we will be applying as much of our free margin as we can to new trades with the same approach, weeding out the losers, keeping the winners. Intermediate term ledger was pretty flat for the week. I think we're up by a very small amount, less than 1%, on a few closed trades. We had at least one loser. We also had some winners there. And more importantly, much like the long-term account, we do have open trades carrying quite a significant amount of profit. I think we were carrying about 10%, almost 10% of open profit on the trades we had, which are only 3 trades at this point. So we are looking for new trades to add to this account as we have the free margin for them. And on the short-term account, we were also pretty flat. We had a winner, we had a loser. And we still have the old USD Swiss trade, which has been going both positive and negative for a few weeks. And we're just going to let that play out. Ultimately, I think that one will evolve into something good. I did end the week at profit, a small profit, but a profit nonetheless. So while we were flat, we do have that trade, which will probably evolve in our favor. And we also have some margin we can use for other trades as this week begins. Notes and opportunities for improvement, no significant change to what we said last week. Some currencies are starting to go directional, very few of them. The market is in consolidation across multiple pairs right now, but some currencies are moving. Afghanistan is now a complete clusterfuck, pardon my French, unlike anything we've seen in the US since we were pushed out of Vietnam back in the 70s or whenever that was, where basically the last American was getting on a helicopter as some of the Viet Cong were poking them with a bayonet. So not a good situation for the US. Not a good situation for confidence in the US. And of course, that does ultimately reflect on the dollar. The dollar has other issues, and it is one of the currencies that are definitely directional at this point. But we'll see how this evolves. Ultimately, market perception is more important than market reality. Or rather, market perception does create market reality. So we have to be careful even when a currency should be weakening or should be getting stronger. It's not what it should be doing, it's what the market thinks it will be doing. And even more lockdowns and restrictions threaten the global recovery due to Delta variant concerns. In fact, at this point, what global recovery? Everything is starting to go backwards in what looks to be a rerun of 2020, except that this variant, the Delta, is supposedly worse than last year's regular COVID-19 or whatever. So not too sure where all this is going, except that we are going into further restrictions, which will and are affecting the economies of different nations. Relative strength meter for this week that just ended. We had the euro relatively flat. It gained against 3 currencies, lost against 3 others, and was flat against 1. The dollar had a almost complete rout. It only beat the yen Everything else was negative for the dollar. The pound was also neutral, winning 3, losing 3, and being neutral on the last one. The yen was an absolute rout. It lost against every other currency out there. The Canadian had a pretty good recovery coming back from the losses from the prior week as oil tumbled. And oil did recover this week to a significant degree, this week that just ended, I should say. So that the CAD is once again moving into strength. The Swiss franc did not have a good week, losing out against 5 currencies and only gaining against the dollar and the yen. The Australian, nice recovery. So the Australian is really consolidating right now. It's sort of going sideways, testing the waters. And the Kiwi, which gave back a lot of gains the previous week, is now solidly green, beating every other currency out there. And again, the weakness on the Kiwi was due to their lockdowns, but everybody's locking down. So you can't punish one economy for doing lockdowns when everybody else, except perhaps the US, is doing lockdowns right now. Every other global economy here in my 8 major currencies, except the United States, is pretty much in some level of lockdown or restriction as we speak. So the Kiwi was unfairly punished, and it looks like the market realized this last week and came back with a vengeance. Fundamental announcements scheduled for this week. We have only one, the non-farm payroll out of the U.S. on Friday morning that will be traded live. There are other fundamental announcements, of course, but nothing that we will be trading live, just the non-farm payroll. And with that, we move on to the charts. As I mentioned, oil did quite a nice bounce back, bouncing off of support somewhere in the low 60s and coming back, ending the week just shy of $70. Still off its high of 75, but a lot closer than after that slump. So that, of course, affects the Canadian, and it affects a lot of other things. Major pairs, we move on to the euro dollar. So the euro dollar saw a nice bit of dollar weakness, euro recovery after a very long bearish movement, which has not ended. We're still under a bearish cloud. So there's a lot of recovery for the euro to do if it wants to regain these more recent heights from back in May, April, or back towards the end of last year, beginning of this year. So still not out of the woods, but it looks like support has been found, is holding, and we'll have to wait and see if it starts moving towards the top again or if it begins consolidating. Pound dollar, not as dire a situation as with the euro dollar. There was never that big slump. We're still in a bullish movement on the pound dollar. And despite a little bit of support breaking in the past couple of months, I'm going to say somewhere around mid-May, it peaked again. And then it started slumping down. It does look like it's finding support and it's not dropping any further. And I'm very, very bullish on the pound, as you all know from what I've been saying for quite a while. And it's proven true. I mean, this chart has gone from the very bottom to the top in record time and now is sideways, but still closer to the top than even to the middle. USD JPY, the yen, of course, not catching a break. It is in a sideways pattern, but it's not able to win against the dollar, and that is disturbing because there's nothing positive about the dollar right now. And, well, there's nothing too negative about the yen. So this is a chart I would expect going to the bottom sometime in the near future. But until that move begins, we'll just be observers. USD Canadian, a big slump the previous week on the back of that oil weakness and a big recovery last week, taking it almost but not quite to where it had started before oil started slumping. It's still inside a channel, a sideways channel and above support, but it's still looking very positive for a further move into Canadian strength, dollar weakness, and a trip towards the bottom. USD Swiss also going sideways, but staged a pretty nice recovery on Friday. Friday was a big move for the USD Swiss, coming all the way back to its previous lows. And of course, looking directional and looking like we might get a chance for a trip towards the lower levels of support. Even the middle of the chart, I'll be happy with that. Aussie dollar recovery as well, which means that the Aussie gave up all it was going to give up and that the dollar is weakening. So last week had a very significant recovery out of the Aussie dollar and an even more significant recovery out of the Kiwi dollar. As I said before, the Kiwi unfairly punished. It came back with a vengeance last week, quite a good mover. And we did take profit on some Kiwi dollar trades. It's back inside a sideways channel, and it's still below a bearish trend line and below the Ichimoku cloud, but it's now attacking those levels of resistance. Aussie Canadian is at the bottom of the chart finding support. And of course, the Canadian had its oil issues, but more importantly, even with the CAD recovery here and there, it did not recover against the Aussie. Again, what I said before, the Aussie seems to have given up all it's going to give up for now. So it is consolidating. Doesn't mean it can't go any lower. It can. But right now it's taking a bit of a breather and could go in either direction. Euro Swiss also playing with a very bottom feeding level of support, very bearish movement. And while it tried to stage a recovery on the part of the Swiss last week, it failed on Friday. I'm sorry, it succeeded on Friday. So it was weakening all throughout the week. And then on Friday, much like with the USD Swiss, the Swiss made a comeback, but it's still not out of the woods. This is support is obviously holding there. It's been tested multiple times, and this pair does not have a lot to give. If you compare it with the USD Swiss chart, that one has a lot more downside to it. It can go much deeper without breaking previous lows. This one is very close to the major low from back in October or thereabouts. Euro pound is decidedly sideways. It bounced for the second time off the lowermost level of support and is now trying to breach that bearish trend line. And well, we'll see what it does. The euro and the pound seem to be evenly matched. And if we go back and look at our currency strength meter for the past week and the week before, it had been neutral. So it's just sideways action. Euro JPY, yen recovering nicely against the euro until last week when it gave up all the previous week's gains. So we can call it sideways at this point. It is at a level of support resistance it's trying to test. It could still go in either direction. I've always, well, shouldn't say always, but in the last year or so, I'm definitely a yen bull. I think the yen needs to get stronger, but it just simply hasn't. So it's been struggling a lot, and obviously against the euro, it's been struggling very, very much. Euro Canadian sideways pattern, tried again to break into that blue channel and failed yet again. So it's like the third time that it makes that attempt and fails. And it ended the week actually pretty flat. So not a whole lot of movement net. But a lot of intra-week bounciness. Pound JPY also in a sideways channel, but did a pretty good recovery last week. Going sideways Thursday into Friday, but Monday into Wednesday was a very, very nice recovery. And this is one of those trades we have open, which is showing profit. Aussie JPY, also a big recovery, basically on what I've said before. The Aussie has given up all it's going to give up for the time being. So it did stage a bit of a recovery against the yen, helped, of course, by the yen weakening at the same time. Euro New Zealand has been bouncing inside that sideways channel for quite a while, and no change to that. It hit the top and is now looking for the bottom. We sold it very close to the top, and we are riding on some nice open profit on this trade as well. Looking to ride it all the way down to the bottom of the channel, and then we'll probably start trading it in the opposite direction. Channels, so long as they're not broken, are very good income makers. Pound Canadian, very erratic, very sideways. Obviously, the CAD had a dismal week the previous week, and then this week it staged a pretty good recovery, which started failing towards the end of the week, but it didn't give up much ground. It's still decidedly sideways, and well, I think this one's going up ultimately. So the CAD weakening against the pound, but it's in no rush. Pound Swiss, one of our more sideways pairs as well, and we did go long, looking to trade it back towards the top of that channel. And last but not least, Pound Aussie struggling to attack the top yet again. So it had a pretty bearish week. And like I said, the Aussie staging a bit of a recovery, but how long can that last? So we'll see. So keep an eye on this one. It's bound to give us opportunities, very good ones in either direction. Setups we see in progress as we kick off the week. The pound pairs, of course, still looking good overall. The US dollar has been unable to maintain a lead for more than a week at a time. So every now and then it has a week of strength and then plummets. The Australian is consolidating, as I mentioned multiple times. Swiss pairs, Swiss is also consolidating. I mean, a good week, a bad week, a good week, a bad week. And it looks like it's seeking out its next direction. And the Canadian dollar is back, or at least it looks like it's back after a pretty decent recovery last week on the part of oil. Of course, we have to see what this week brings us, but it is looking good for the CAD. And my final words of wisdom here, words in conclusion, are you bored yet? A lot of people come into the markets looking for excitement, and this is not the place to find it. Trading isn't supposed to be exciting. Despite all these Hollywood extravaganzas like Wolf of Wall Street and whatever movies these were with Michael Douglas as Gordon Gekko, where you see all the fascinating aspects of trading millions of dollars, that's not the way it works in real life. If you're looking for thrills, you're much better off at a casino where you can actually get some free drinks and comp rooms out of for your effort. And there's nothing wrong with looking for excitement. There's just wrong places to look for it. If you're looking for excitement in the market, you're not going to end well. You should be bored out of your mind when you're trading. True, there are a few instances here and there throughout the year when it gets exciting, but these are supposed to be few and far between. It's about making slow, steady gains over time and trying not to lose too much, being there when there is a big move in your favor. And of course, that does not always work out. I always tell people that what I really offer is a get-rich-slow scheme, and they work. At least it works better than a get-rich-quick scheme, which never work. So there you go. There are better things to do with your money if you have a lot of money. If you have a few million handy with those larger amounts of cash, you're going to find a lot more lucrative deals and probably at a lower risk point than trading the Forex market. But if you have a few thousand to a few tens of thousands of dollars, the Forex market is going to be your best friend. But he's very slow. He's, like that kid in elementary school that was very slow, just like that. So don't be in a rush. Give things time. Time is going to be your friend. So patience, my friends. And that's going to be it for me this start of the week. Any comments or questions from anyone? Okay, then thank you very much. That is a wrap. I'll be sending this out at some point, and I'll see you guys throughout the week, or those of you not subscribing yet, God knows why. I'll see you next Sunday. Bye-bye.